Chris Swift is our guest in this segment here. He is with Swift Trading Incorporated, based out of Nashville. Good morning, Chris. How are you?
Marlin, doing great, sir. How are you this morning?
I'm doing fine, thank you. I appreciate that so much. And let's take a look at our opening market activity here as we get rolling on a Monday. We had a lower trade overnight. We had a lower start to the day. We're kind of continuing that momentum here so far. Haven't really changed much from the open. We have September corn now 7 1/4 lower. We're at $3.30 per bushel. It's about where we were on the open. December down 7 1/2 at $3.37 1/4. Meanwhile, in our soybean trade, here are the quotes provided by bar chart. We have August down 6 3/4 at $8.80 1/2, and you have November new crop soybeans at $8.82 per bushel. That is down 8 3/4 cents. Meanwhile, in that wheat market now, wheat has Chicago September trading unchanged now at $5.34 per bushel. So that's interesting in itself because it shows we had a low of $5.22 1/4. Well, that's about a 12-cent rally already off of its early morning lows and almost on the high of the day. Now it's a 1/4 cent lower is all. Now let's take a look at Kansas City wheat. Kansas City September, check it out. Now 4 1/2 higher at $4.56 1/2, going completely counter to what the corn market is doing today. In the Minneapolis spring wheat trade, you have September down a penny at $5.25 1/4, but that is still 6 cents off its earlier low. Interesting things going on in the wheat markets here to start out the week. All right, Chris, pick one of these out here. What caught your attention this morning on the open?
Well, probably the corn and the bean market mostly because the high-pressure system that is building over the Midwest and the Corn Belt didn't quite get as hot as what they thought it would, and a lot of that corn is a little bit early. So I'm not real sure how bad that this heat will impact it because it looks to be in really, really good shape. And then Friday we got the announcement from President Trump that the Phase 2 deal with China may or may not go through. He seemed a little bit hesitant to it. It gave some pressure on the market. So there just doesn't seem to be anything really good right now in the corn and bean market to boost it up.
All right. Now back to that wheat trade that I was just talking about here a moment ago. Lots of spread activity over there, but is that about the only thing even moving wheat? Looks like harvest is still continuing.
Yeah, as much as I can tell, I haven't paid a great deal of attention to it. It does look like the harvest is going along just excellent, and it did rally on Friday where the other two didn't. So there may be a little bit of support there due to the harvest. And other than that, I really don't know much of else going on in the wheat market.
So I was curious, do you think that the dollar value with September going down 329 points right now at 96.285, is that supportive to the wheat trade?
Well, it is. Anything that we see the dollar go lower to on the currency side is going to be beneficial to us because we've got such a high dollar. And that 96 range, we have been at it a couple of different times before. We looked it back up in the 97 1/2, close to 98. So if we can go back down below 96, that might give some of these exporters some renewed faith that we can move some of this grain out of here.
Okay, Chris, we'll come back here in a moment and we'll take a look at some of the other market action going on. We're talking with Chris Swift. We'll be right back. Let's take a look at our cotton market, see what's going on there this morning in the soft markets. We currently have December new crop cotton down 66 points. We are now at 63.66 cents per pound. We'll check in on canola, too. And right now, your November contract is up a dime. We're at $479.60 per metric ton. That, of course, is in Canadian currency. And checking out our rice market this morning, we have September now 4 cents higher at $11.98 per hundredweight. November down 9 cents at $11.71. Well, we're talking with Chris Swift, and we wanted to take a look at our livestock trade here. We'll start with our live cattle board with the August contract, showing a last trade of $100.05 per hundredweight. So we're up just a nickel. Doesn't get much quieter than that. October down 7 cents. We're at 104.50. Chris, what is it about this market that makes it so timid to start things out here today?
Well, I think the premium on the fat cattle market, we traded $94 to $96 cash cattle last week, so we're carrying a $3 to $8 premium depending on the contract month. And we've been able to facilitate some kills, 664,000 head last week. That was up over the previous week, and we're only down about 3% now total beef production year over year. So it looks like going forward, as we keep numbers stacked up on feed here, we'll be able to outproduce last year in total beef production.
Now, when you look at the feeder cattle trade, these quotes from bar charts show that we have August up $1.20 at 136.95, and you have September 95 higher now at 138.27. So they're really gaining on their live cattle cousins here. Do you think that's going to be the trend here as long as you have weakness in the feed grains?
Probably not a great deal. We've kind of heard that some of the sales that took place last week were a lot of farmer feeder sales, trying to get something to move that corn through. And now that it looks like that corn may not be going up as high as what some thought, they might even be more interested. So similar to what you said, yes, the lower grain trade may help because that would allow them to feed that corn through those cattle instead of having to sell the corn.
Let's take a peek at our lean hog markets. And right now we're mixed, but mainly a little weaker. The July contract, of course, hardly any volume taking place there anymore. July is up 12 cents. Most of your action is going to be in August and October. And August currently down 22 cents. We're at 49.65. October down 35 cents at 49.50. Wanted to take a real quick look here at what's going on in our crude oil trade this morning. Currently on the West Texas Intermediate crude, we are down 33 cents a barrel with the August trading at 40.22. So still above $40 per barrel on that benchmark. Chris, good to visit with you, sir. Appreciate it. Wish you all the best. Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. John, back to you.
All right. Thank you, Marlin.